Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. I'm with Ireland Como Lafoy. Today is the 26th of August. All right, today we're going to talk a little bit about the waiting game, or the time of year that can be frustrating for us. But first, let's get into what happened in markets today. Canola was down $4.60 on the NOV. 654.80 is where that closed. Minneapolis down 2 3/4 cents at 590 3/4. Kansas wheat dropped another 3 cents at 520 3/4. Chicago wheat gained 2 cents, 529 3/4. As you can see, there's still a premium for Chicago over Kansas. Soybeans gained 1 3/4 cents up to 10.47 a bushel. Corn dropped 2 3/4 cents today at 4.12. Soybean oil dropped 1.4 cents about at 54.95 at the close today. Canadian dollar, which is still trading up 15 points, 72.30 is where we're at there. A little bit of a comeback from below 72 as we ended last week. Live cattle up $1.38 to $2.37. That makes a new high. We're going to talk or show a chart about that in a second. Feeder cattle also making a new high today. 315 up or 363.10 a hundredweight. All right, let's talk a little bit about the seasonals. First, I'm going to start with canola. Just kind of want to get into what it looks like out here for some of the seasonals, because I know there's a lot of negativity around what the markets are doing at this point in time, at least for a lot of them, such as wheat and canola and things like that, and how low the prices have been recently. Here's the canola seasonal chart. We are seeing this little rally here that I have put on the screen. And, that does suggest that we might see a little bit more weakness as we move into the beginning of October on this contract. This little first notice here, that would be the first notice for the September contract, which there isn't one for canola, but it's showcasing the other ones on here as well. So we're kind of getting right up to that point where the mid season, or the August pre-harvest rally has happened. We'll show that in a chart in a second, and we may see some weakness as we move through harvest, which is a normal seasonal thing to have happen. Obviously, it's pretty self-explanatory. We get a glut of supplies on the market, and hopefully we're getting better yields than expected. Hopefully most of the time, I would say farms generally pad their fields or their yields a little bit, and so they're pleasantly surprised when the crop comes off, and then they are looking to market that extra sometimes, and we get those seasonal dips. So again, this isn't out of the ordinary what we're seeing here, and the rally that we've seen in canola may fade a little bit out as we move towards harvest. So just want everybody to be prepared for that possibility. Let's look at the beans here. Again, this is a little bit of a roller coaster through this time of year, the November soybeans. Here is the first notice day as we get into the September, or the start of the September delivery contract. And as you can see, we generally see lows here. There is a bit of a rally here that generally occurs after. However, we have seen that rally happening now. And again, I'll get to the futures charts in a second. I just wanted to show all these seasonal charts first. So we generally do see some weakness as we get through this part of the year. Either that came early or it's going to come later, as we are seeing a little bit of gains on the soybean front, which largely may be about macroeconomics and things like that. So just wanted to show that chart. Anyway, here is another one that I know will be interesting to a lot of folks, is the Minneapolis wheat seasonal pattern. As we get into the start of September, as you can see, that's when the lows are posted. And this doesn't even discriminate between the 5, the 10, the 15, and the 30 year. These are charts by Moore's Research, by the way. All of them tend to kind of bottom out as we move into the September delivery month, and they only start to climb out of that in October. So again, it's a waiting game. We may need to be patient in this market. We have seen basis levels increase a little bit as a result of the low prices. I think farmers are not participating. Elevators may be looking to book some up, and that even includes the October delivery period. We've been seeing some gains. I did include that chart in our morning commentary this morning. So if you're not a subscriber, you might want to get on that, because we do send more information to our paid subscribers. So, the rest of the wheat complex looks very similar. This is the Kansas City wheat. We tend to see a bit of a saucer bottom in this one as we get through the July delivery contract, and then all the way through into the September delivery contract. So we are kind of seeing exactly what this would suggest, these lows here, or some weakness in Kansas as we get through this point of the year. It does, tend to come up a little bit in October, but I think if we want to look further down, we may have to wait until spring in order for the seasonals anyway to make a little bit more sense. That's not to say there aren't rallies that can come, but I think this might be one of those sell the rallies kind of markets, at least until we get into spring and we get a better idea of what is coming in the northern hemisphere growing season um, going forward. Here's Chicago wheat, pretty much the same thing. Won't touch on this too much as we don't have a lot of folks who are listening to this that need to hedge a lot of soft wheat. So, speaking of subscriptions, you might want to subscribe to our insights. It's only 99 bucks a month. We publish a morning commentary every day. We do a video pretty much every day. We do a weekly report, and then we do ad hoc reports as needed if there's something happening in the marketplace like USDA or Statistics Canada that come out midweek. Our last report, we put a lot of detail into the Chinese tariffs. We readjusted our S&Ds to show what that might look like, and really good report, if I do say so myself. And that is something that you get as well if you do sign up for our premium service. In the next little bit here, I will send you that last report for free so you can see our fundamentals on canola. All right, let's get into some futures charts here. There's December soybean oil. Last couple of days, or I should say, into the end of the week last week, we saw a shot in the arm because of the EPA announcement, which wasn't necessarily bullish, but I think just the clarity that we have now on the exemptions and those who didn't get exemptions, and the possibility still exists that larger refiners will need to make up for the exemptions from the smaller refiners. So we got a boost in soybean oil into the end of the week last week. We've seen it fade out a couple of days here now. That trade last week brought us over the 20-day moving average. Now we're testing the 20-day moving average again. Hopefully that remains as a support now that it's been broken to the upside, and we continue to see some strength in soybean oil, because that makes a big difference when it comes to the canola market. We did see some strength in the canola market in the last little bit. It did fail to move above its own 20-day moving average. That 20-day moving average is now tracking really well along the downward trend line inside of this channel, and we are continuing to see this channel trade in canola as it's grinding lower into the seasonal pattern, as we mentioned previously. Thought I'd touch on Euronext rapeseed as well. It's also kind of trying to find bottom here. We did see a big reduction here before. That's the day that the Chinese tariff was announced against Canada. So we saw a lot of the rapeseed and canola markets decline that day. It's been kind of anemic here, having trouble getting over the 20-day moving average. So no bullish technicals here at this point in time. What might be helping canola to some degree, though, is Saskatchewan Premier is set to go to China, in a bid to end the tariffs. Mr. Mo, I just like saying that. Mr. Mo of Saskatchewan, said on Thursday that he will travel to China for talks to persuade Beijing to drop the new canola tariffs. And Saskatchewan is one of the hardest hit. Alberta would be right up there next. It's a big deal, and I'm glad that our politicians are paying attention to it and taking some action on it. I'm not sure if they are federally, but I definitely know there is support to get a resolution provincially from a lot of our governments. Another interesting development here. Now, that last Scott Moe story was a little bit late. I haven't made a video in a few days. This also is a little bit dated. It was printed back on the 21st of August, and India is importing canola after 5 years as local prices surge. So the prices in India are rising, and that is incentivizing more imports into the region in order to keep prices low, because of course low prices are good there in order to keep the food supply safe and plentiful. So there's kind of a push pull in India about protecting farmers and their prices, but also making sure that the food supply is cheap enough for the rest of the population to consume. So imports of canola are now happening into India, and generally speaking, again, that's probably going to be serviced by Australia or some of the other. But it still does open up some avenues of where the rest of that Australian canola is going to go. Some of it now is going to China, as we've discussed prior. Some of it may now go to India. Some of ours might be, sent to UAE or even Bangladesh and then re-exported through India. Those types of things. But that does raise the possibility that we will maybe not necessarily make up the losses that we may see from China as a result of tariffs, but at least there are other avenues that we can take in this marketplace at this time. Did want to kind of mention some cooler weather here. There is some cool weather kind of creeping into some of the growing areas, particularly as we move into central Alberta, even northern Alberta into the Peace region. This northern area of Saskatchewan probably doesn't have a lot of crop, if any, but there might be some crops dotted along this line here. And this blue area is essentially where the frost line starts, right? Or at least it's getting pretty close. Sorry, it's getting pretty close to the frost there as we move towards these lighter blue colors. Purple is where we definitely see minus temperatures. This would be crop killing temperatures. So we don't see that now. This also, just to make sure that I'm giving accurate information, this is would be for September 2nd. That's the coldest day that we're going to see in the next little while. We have passed the new moon stage, which I know a lot of folks feel that we get a drop in temperatures as we get to the new moon, particularly in August. That happened on the 23rd, so about 3 days ago. We're now getting out of that and towards the full moon again. I don't know what to believe. I don't know if that's true or not, but you know, regardless, we generally tend to see cooling temperatures as we get into September, and our kids go back to school. A couple of other futures charts here. Dees corn saw a couple of days here of losses now after the gains seen from the Pro Farmer Tour. But what's really fun is, and it depends how you look at it, I suppose. If you have cattle, these cattle prices continue to go higher. If you are buying steak at a restaurant like I did last night for my daughter's birthday, definitely hurts the pocketbook. But feeder cattle made a new high today. Live cattle made a new high today. Again, I've been saying this for a long time now. It'll be very difficult to peg the high in this market. All right. Thank you for joining us. My name is Brian Como again with Ireland Como Lafoy. We will see you again tomorrow.